Welcome to The Explainer. Today, we're going to dive into a part of our economy that's absolutely crucial, but, well, it's pretty much invisible to most of us. Commercial truck financing. I know, it might not sound exciting, but trust me, without it, the stuff you rely on every single day would never even make it to the store shelves.
I mean, just think about it for a second. Pretty much everything you use, everything you eat, everything you wear, it got to you on a truck. They are literally the circulatory system of our entire economy, moving all those goods around and keeping things humming.
And that brings us to the big paradox we're going to unpack today. If these trucks are so critical, so essential, why is it so incredibly hard for good, qualified people to get a loan to actually buy one? And this isn't some tiny issue. It's a massive bottleneck in our entire supply chain.
Okay, so let's start with that roadblock itself. To really get why a new solution was so badly needed, we've got to see the problem from both sides, the truck dealers and the folks trying to buy from them.
So for a truck dealership, when their customers can't get loans, it creates what the industry calls a velocity bottleneck. Basically, a buyer is ready to go, checkbook in hand, but can't get the financing. So that truck, it just sits there. The inventory doesn't move, it ties up all the dealer's cash, and it costs them money every single day.
So why the bottleneck? Well, it's pretty simple, really. Traditional banks have built a huge wall of obstacles. Their systems are slow and bogged down in paperwork. They have these super rigid credit score rules, really strict limits on a truck's age and mileage, and they're only open 9 to 5. As you can imagine, that's just not how the trucking world works. And this table just lays it out perfectly. On the left, you've got the bank's way. Rigid, one size fits all. And over on the right, you see a totally different approach. One that's flexible, based on the real world, and looks at the whole picture, not just one number.
Think about this number for a second. 10 years. That means a perfectly good, well-maintained 12-year-old truck, maybe one that just had its engine completely overhauled, gets an automatic no from a bank. It doesn't matter what its real value is. It just doesn't make any sense.
So you have this huge gap in the market created by the big banks, and a gap like that doesn't go unnoticed for long. It opened the door for a completely different kind of lender, one with a much more human approach.
And this quote, this really gets to the heart of it. This is the core belief of specialized financiers like the Mehmi Group, who we're looking at as our case study today. Their whole mission, really, is to help the people and businesses that the traditional banks have just left behind. Their approach is deeply personal. The company was founded by 5 brothers who, as immigrants, ran into these exact same barriers themselves. They knew what it felt like to be shut out. And that experience? It shaped their entire way of doing business, which is built on really knowing the industry and understanding what this equipment is actually worth.
So this is the crucial point. It's a fundamental shift in how you look at things. Banks are focused on the debtor, your past, your credit report. These specialized brokers, they focus on the deal, the value of the asset, your current cash flow, and the future potential. It is a total game changer.
Okay, so how do they actually get these deals done? It's not just a different mindset. They use a completely different set of financial tools, ones that are specifically designed for the transportation world. First up, you've got asset-based lending, which is honestly just pure common sense. The loan is secured by the truck itself, because in this industry, the truck is the revenue engine. The lenders get a legal claim on the asset, and the driver gets the money they need to hit the road. Simple. Next up, they solve one of the biggest chronic pains in the industry, the cash gap. A trucker delivers a load, but might not see a dime for 30, 60, even 90 days. Invoice factoring completely closes that gap. Truckers can sell their invoices and get paid right away, so they can cover fuel and insurance and keep those wheels turning. And this one is really clever, especially for established businesses that need a quick injection of cash. It's called a sale-leaseback. They sell their own trucks to the finance company for a big chunk of cash, and then they immediately lease them right back. They never stop working, but they've just turned their physical assets into powerful, liquid capital.
The entire process is built for the speed of the real world. A buyer can go from putting in an application to getting funded in just a couple of days. Now compare that to the weeks, sometimes months you'd wait for a bank. When you've got a contract on the line, that speed is absolutely everything.
So what does all this add up to in the real world? For real people, this is the part that really matters. We're talking about more than just money here. We're talking about opportunity.
For a lot of drivers, this model opens up a genuine path to owning their own business. It lets someone who's been driving for a big company their whole life finally become an independent owner-operator. That's not just a different job. That's a huge shift in economic freedom.
And this isn't some pie-in-the-sky dream. That journey to becoming your own boss can start with a down payment that's actually manageable, maybe just a few $1,000s. It makes the whole goal feel real and achievable.
And get this, the path to ownership is fast. With a clear plan, a driver can fully own their truck, their main business asset, in as little as 2 years. That's an incredibly quick way to build equity and create some real, long-term financial stability. The impact on the dealerships is just as huge. This chart shows how this kind of financing can dramatically speed up their inventory velocity, letting them sell way more trucks way faster. It opens up their market to a whole new group of customers that banks would have just turned away.
And at the end of the day, for the buyers, whether it's a single driver or a growing company, this model lets them get the equipment they need without draining all their cash. And keeping that working capital free is absolutely key to surviving and growing in a really tough industry.
So what's the big takeaway here? It's that wherever traditional systems create these big gaps and bottlenecks, new, innovative models will always show up to fill them. They're the flexible, responsive engines that power the real economy. And that leaves us with one final thought to chew on. As our economy keeps changing, who's going to step up to finance the next generation?